Good afternoon. Scott Redler, Chief Strategic Officer of T3Live.com. Welcome to today's recap. Anyway, we walked in this morning, futures are down about 4 to 6 handles when I did the morning call. We weren't sure what's going to happen here. Are we going to break this upper level? Will we take out the important support of 1333 to 1337 and start what could have been somewhat of a correction? So you come in and you have a few if-thens on the table, and then you wait for the market to confirm which plan that could get going. And as far as soon as the jobless claims came out, which happened to be after the morning call, they were positive. They had some positive data. All of a sudden, futures were somewhat positive. And then as the market progressed throughout the course of the day, we started to take back more than what the bears would have liked. I put out on the table a few times on Twitter, obviously in the chat, saying this is an area that the bears would want to defend if they have any control, if they have any power, and they had none. So the real question is, how did you handle it? When we also talked this morning, I said if you came in short, the question was, are you going to cover into what has been a good place to cover after a down move into support, or will we be able to add for a break? And right away within the first hour, you knew you couldn't add for a break. The question was, could you get back long and then readjust and switch gears? Now, for all of you that are not members of T3 Live, if you look behind me, this is a little bit of my setup. This is, I have a 6-monitor setup. You see a lot of different charts. They're all over the place. So I got a lot going on throughout the course of the day. So I'm on a radio, we're typing in the chat, I'm doing some Twitter. So every now and then I can't give everything that we're doing into the stratosphere. You have to really be a virtual trade floor member. Now, as far as going into the charts of today, I was not in here since the morning, and I drew a lot of lines, a lot of areas to see what would hold, where things can go, how to have a plan. And let's take a look at what took place here. First things first is the S&P. I talked about this level in the S&P. Said if we can get a 30 to 60 minute close below this floor, below this 1337 or 1333 to 1337, we could potentially go here and here. What happened? Didn't come even close. And now we wound up engulfing this entire range. A lot of guys were saying we were overbought. You know what? We were not overbought when we came in today. The McClellan oscillator was actually negative because all these days worked off that overbought reading, which put us in the game for what could have been higher prices, which is what happened. So at this point, if you look at this accelerated uptrend, it is still intact. We didn't have any kind of move lower, and the macro investors, you guys are yawning. You guys are probably sleeping because you never even had to worry about this move ever since this October 4th low. So support was not broken. So as the day progressed, you had to figure out where is it that you wanted to potentially cover. So right away, I said out there, the bears, if they have any control, they would not let it break above this area. Okay, which obviously around that 11 o'clock we did. So if you were had hedges on or you were leaning short, this is where you should have covered because it should never have taken out this resistance. Okay, and then obviously it should never have really gone all the way back to the high. So right there, this first of all, this was your first move off the open. Okay, and then once it flagged up here, this was your hello, potentially, this thing's not going to move lower. This kind of puts you on alert. So if you didn't cover into this move, you said, okay, I'm going to give it a little bit more time. Came back, retested. This was a spot you had to cover. This was a spot that I started to add, some longs. I get out of some of my hedges, and then here you go. Nice day into the close. As far as some individual stocks, if you guys remember, my plan was that they were probably going to be, push Apple lower. And this whole week, the plan was, to a storybook. Unfortunately, I didn't trade it as well as I talked about it. Hopefully, some of you guys did. Talked about how they could push the envelope all the way into Wednesday to 520. They went to 526. And then this morning, I said, you know what? I'd be interested around, 486 to 490. They probably push it lower, get everyone bearish, get everyone to buy the puts. So this way they just, impulse everyone into the calls, impulse everyone into the puts. And then by tomorrow, they probably close it somewhere around 500. Now, if you look at the chart here of Apple, you will see that this is what I drew this morning, okay? Right here, this was the line. I did not come back in here. Go rewind and look at the morning call. This is where we came right to, okay? And obviously, it was hard to buy into that. And then, another different red dog reversal took place when we went back above 496.89 for then what was, a nice $5 move, to the green side. So now I do think it's going to take some time for Apple to work off this huge, outside day. So what typically happens over the course of a time period is you see some type of wedge develop. But as far as today is concerned, the huge travel range, there was so much opportunity in Apple today throughout the course of the day. And if you look at the 5-minute chart, once it really broke, here was a quick move that wound up getting negated on this area. It held higher, okay, and then once it really came and filled this gap, this was the quick and easy money, if you want to say easy money, when it went above 496, went positive, and then went back to the prior day's resistance. So if you were on Twitter, I said 503 to 505 would probably be the next resistance, and this is where I got it from. I didn't get it from my head. I got it because this right here going across was a big congestion area from the previous day. So figured it would be some type of resistance, which it wound up being, but the market, never pulled back to that 500 or so. But anyway, here was your consolidation. This is when, it broke this little downtrend or descending trend line on the day. And, here, if you would have just trailed it versus the low, another could have been an 8 to 12 point, trade depending on your time frame. But overall, nice little action here. And now I would say that this is going to wedge a bit, before it decides which way it's going to go. As far as some other situations, we talked about the financials, that it could lead lower. They were the first ones to get to their 20-day to use 111.40 for Goldman Sachs as a barometer if you want to be long trade against it. If you look at Goldman Sachs was weak and then bounced very hard off that level. So if you were short, trying to play for it to break it, you covered real quick. If you were buying the dip, you did okay. And now it looks like as if it's going to flag here, go sideways, and now it's back in the game. Here was your dip to buy if you were looking to buy a dip, which I did not. I did it in JP Morgan actually. Here was the breakout, and now going sideways. This is in the game to continue. JP Morgan also is in this nice little range. I chose to go with this one, which I'm going to try and hold in my swing. I'm in tier 1, and if it were to start trading above this level, we'll see a $40 number, and obviously the market's going to be doing real well if that's the case. So as far as the banks, they did hold their 20-day. That means the dip was viable, and now with a bit more consolidation, maybe there's some momentum. And recently it's been hard to find momentum, but we'll see if that changes if we stay strong and we continue. As far as Microsoft, guys, we're all over Microsoft. Everyone's like, how'd you know Microsoft was going to be frisky this year? Or, you said it on Bloomberg. You've said it, in different blog posts. Just because of 8 to 10 year base and then that potent move that it had. Potent moves usually lead to bigger moves or igniting bars. They're called igniting bars because they ignite a move as long as they continue or as long as they hold higher. Microsoft's done it every which way. So if you look here at Microsoft, unbelievable. This is when it broke this downtrend. Okay, this is when I called it frisky, right around 27. I also said it was my mega cap surprise. Unfortunately, I haven't been making money with it because I just chose not to deal with it. And P.S., it's had a really nice move, and then today it really extended. Okay, so if you're in Microsoft from this area and you've been using a tier system, congrats. You could have even traded it from momentum today. Believe it or not, momentum in Microsoft is pretty crazy, above 30.80. Okay, so a lot of guys do say, you talk about all these stocks, how come you're not in all of them? You know what? Because I can't be. I am your offensive coordinator, so I put the plays on the field. If you like the play and you feel like you could run the route, it's in your wheelhouse, you go for it. I'm usually in some of them. I'm not in all of them because I can't be at my desk all day long. I get called to go to the media. I have to go in meetings. I'm a partner here, so I can't be everywhere. So I pick and choose which ones I want to go with. It doesn't mean you can't be in it. So with that said, I did enter Intel today. I think Intel's got a nice tight pattern. I feel like maybe people will start looking for other mega caps because of Microsoft, and we talked about Microsoft in Morning Call with Alex on Wednesday. If you look here at Intel, I love tight patterns, right? This was the last time Intel broke above, right? It broke above this area. Now you have a nice tight channel. So for, I would say almost, 6 weeks now, it's been caught in here. So what you want to do is you want to be in tier 1, so you have a feeler, you know the speed. And then if it were to start getting above this 27 with some volume, that's when you add for momentum. If you go to your monthly chart to look at Intel, wow, looks like it's just starting, to clear, which is already in motion. This also has been in a 8-9 year base. So, it's got cash, it's got a low PE. This stock, in my opinion, going across this way, could get to this range at some point this year, especially if this type of action continues. Why not? But obviously we'll see. Same way people thought I was crazy with Microsoft. I showed you the daily chart, like how'd you get 32 to 35 as your target? I said, because this was the recent high back in 2007. So I'm sure between this high and this high, it's going to bring out some sellers. So once we clear, this descending trend line, which we did, that's probably where it goes. And it's on its way. You just take trades along the way. As far as another stock that I know has been difficult, because I've been trying to buy it on the breakout, and I said, you know what, I'm not going to try and buy it this time on the breakout. I'm going to buy it in the base, tier 1, sit with it, have a little risk on, and then if it starts to ignite, I'll go after it. And that's IBM. IBM, Buffett's, I think he upped his stake once again. You look at this daily chart. Here is the recent pivot. This was the move off of earnings, going sideways, very tight little bars. I'm in, I would say, a tier 1 right now. If it starts getting above this 194.50, that's when I'll add. I want to make sure I see volume, but I'm not going to, I'm not going to wait till then. So I'm in the base. I'm doing it in the base. So this way I can watch it closely. Kind of like what happened with Qualcomm today. I know Qualcomm has been slow. It's been lethargic. I started buying it in the 61.50s, saying, you know what, good earnings, didn't fill the earnings gap. At some point, it's going to continue. I know I added a few times, and it's been very slow, very lethargic. But finally today, I saw some volume come in. And since I already owned it, I said, you know what, I know this stock. It's acting a little bit different. Let's go for it. Let's add around 61.95, 62. And now it wasn't a blockbuster move in Qualcomm, but it's starting to leave. So, here is where I started buying a little Qualcomm. Remember I said it's not acting great, but it was just really also absorbing this big move. And then here's where you add. Now, hopefully, it extends a bit. So I'm still long this, and I think can go to 63.5 to 65. It looks pretty good. Guys, we're also looking at SanDisk today. SanDisk is trying to fill that gap. It is one of those bottom feeder type trades. It's been in the penalty box since earnings, but if you didn't get caught in this, I think I actually lost in the option play because I thought it was going to go and it didn't. Now it looks like it's trying to set up to get back to that 50 area. LVS keeps moving along. Congratulations to you guys. For some reason, I got away from this one. Here is your buy. Remember I started talking about if it can get above this 50 and change, you could see a lot higher prices. We've been in what is it, an 8-month base, and now it looks like it's just trending higher. So this has been a macro investment that I've been talking about for a while. So if you're a macro investor, I would stay the course. This thing could see 70 to 80 bucks. Look at this big move that it had, in which we traded it back and forth the whole time, or a lot of the time, and now it's holding higher. Not retracing, so that tells me there's demand there for higher prices. So LVS, still one of the chosen ones. As far as Celgene, I sold yesterday just because of, I guess you could say, boredom, or I thought we were pulling in. I didn't know the stock so well. I was playing for a breakout, but it held up there, and now it looks like it can continue. So if you're in Celgene, it still looks fine. I'm not in there. As far as the OAHs, I'm still in my OAHs. Today, nice little green day. You have a descending little, trend line here, descending channel. If it starts going above 43.50 to 44, this could look really good for a move to 46 to 48 pretty quick. Here's that left shoulder, the head, the right shoulder. This was your tier 1. Here was your tier 2. And now it's descending. This almost now looks a little bit more like a cup and handle, where here's a big cup, came back to the resistance area, and now it's building a handle, to get all the people out that think that it's not going, or they're getting bored or whatnot. And then if it ignites, you still have a 34 to 44. So from 44, what was that, 10 points? That gets you, what is that, 54? Yeah. So I would stay the course in this if you're a macro investor. And that's the key here, is realizing what type of investor you are. Are you an active professional trader that wouldn't be able to hold the pain if we did break 1333 to 1337 and go down to 1320? Or are you, an active investor that plays macro major trends and looks for strong stocks and stick with them and use a tier system? And those typically are guys that have other jobs, that do a few trades a week, that just are in tune with the market because they want it to work for them, versus, calling the stockbroker like that commercial, the times, those times weren't so good. But, brokers did, whatever, I'm not going to go off on brokers. But anyway, I think a lot of people are taking accountability for their own actions as far as picking and choosing the stocks they trade, maneuvering the market like a professional. So keep doing that. And it's not a perfect environment. The volume's not perfect. Europe's still far from fixed. I know we have our own little deficit problems in Washington, but ultimately price action doesn't lie. And if you were short today and you rolled it up all day long and you said, I'm not covering this thing into the close, maybe you get a little saved tomorrow, but it's the wrong thing to do. Support held. It didn't break. The accelerated uptrend is still intact, as well as the intermediate and the longer term. So don't fight this thing. Call today a loss if that's what you came in for. Like today, I broke even and lost a little bit, but I'm going to wash it off and reposition like I did, and now see if we could get some upside in some of these stocks that are acting well that didn't pull in for a move. And if you're invested still in those stocks, then maybe you stay invested in them because they give you no reason to get out. Add some cash flow on the trades that we're doing as professionals, and then take it off as they extend. And that's how you add tiers to an existing investment for cash flow as an active investor / trader as well. So with all that said, it's Thursday. Al Steele is actually having a little happy hour, so I'm going to go say hello, wish her luck, and then next week we start the new format with, I think, Chow on Monday. Not this Monday because it's a holiday. We'll be at the Expo. Everyone should go to the Expo. It's going to be really good. I'm speaking for Schwab, and I'm going to go over a few different strategies, and we're going to be speaking in our booth, probably 8 presentations from Mike Lee to Peter Renzulli to Steve LeVay. Evan is going to do what Evan does, which is awesome. So there's going to be a lot of good content going on there, so you should definitely come to the Expo. And then, so Tuesday is Brittany Umar. Wednesday is Stephanie Link from Action Alert Plus, Jim Cramer's partner in the charitable trust. She gives a good fundamental approach. And then Thursday will be Jill, who you guys know and love tremendously. You've been watching her for a good year now, and she adds a ton of value. So with that said, sorry about the solo morning call this morning. I'm sure you had enough of Red Dog. I've had enough of myself, to be honest. And I'll see you tomorrow morning at the relaxed morning call, closer to 9 o'clock. Have a good night, get some drinks, and relax.